attention family offices, and wealth management firms. Do you have a more aggressive long-term fixed-income investment strategy for 2026? Would you appreciate fully amortized investment opportunities with 5, 10, 15, 20, or 25-year terms? Would you appreciate long-term, high-yield APY between 100 and 500 basis points over the current SOFR or Wall Street Journal Prime market rates? Would you appreciate non-securitized, passive, direct participation in commercial real estate investment opportunities that can offer such excellent long-term returns? Great! Have you noticed that apartment communities are constantly being built and rented out across the country? It's true. These multifamily income-producing assets continue to thrive in virtually every major housing market from coast to coast. Commercial builders and real estate developers create these properties to meet sustained demand from long-term residential tenants. In the past, these experienced professionals relied on their local banks and lending institutions to finance their acquisition, development, and construction projects. But now the commercial banking and lending landscape has changed significantly. Construction and development loans are no longer as widely available or as flexible as they once were. This has left many commercial and residential builders and developers with permissible, marketable, profitable projects that need financing. The private investors and wealthy families you represent can capitalize on this. But how? You can talk to Builders Commercial Capital Group, BCCG, about our passive, long-term, privately placed commercial real estate note investment opportunities. BCCG is a commercial mortgage banking firm that exclusively represents commercial builders, real estate developers, and construction companies that design and construct rental income-producing properties nationwide. BCCG's sole business is the origination, underwriting, and closing of RESPA-compliant commercial real estate loan transactions. That's all we do. BCCG does not offer pooled limited partnerships, joint ventures, REITs, or equity participation structures. Investors participate directly in the loan that we originate to co-invest in the mortgage note directly, with no joint venture or stock purchases required. As first lien note holders, investors are contractually entitled to fully amortized monthly principal and interest payments, paid before taxes, insurance, and developer profits. The multifamily housing market continues to expand at an unprecedented pace across markets from coast to coast, driven by sustained renter demand. Builders and developers can barely keep up with the demand across the entire multifamily housing spectrum. Everything from affordable middle market, luxury, assisted living communities, and large-scale multifamily developments. This sustained demand puts BCCG in a unique position to bring profitable development opportunities to the private investor marketplace as passive, real estate secured, long-term, fixed-income investments. As these properties are built, leased, and stabilized, a portion of the rental income is contractually encumbered, collected, and remitted monthly to the note investors. Investors are mortgage note holders, not equity partners or property co-owners, and are therefore legally entitled to the cash flow generated by the property without the operational burdens or downside risks associated with direct ownership. These commercial real estate development and construction projects typically require between $10 million and $150 million in capital. To satisfy these varying capital requirements of these projects, BCCG utilizes commercial real estate loan syndication. Through the syndication process, a single commercial mortgage loan is divided into smaller mortgage shares, referred to as loan participation notes, or LPNs, which are offered to accredited investors as direct participation, pass-through notes. Once all LPNs are sold, a local title company closes the transaction using RESPA-compliant loan documents prepared by a commercial real estate attorney. In BCCG's world of private, non-securitized commercial mortgage banking, LPNs function similarly to collateralized mortgage obligations, or CMOs, found in institutional CMBS markets, allowing multiple firms to co-invest in single commercial mortgage while tailoring exposure to their individual risk criteria. For example, a $10 million project can be divided into 20 LPNs at $500,000 each. A $75 million project may be divided into 150 LPNs, while a $150 million project may be divided into 300 LPNs. Syndication enables multiple family offices and wealth management firms to participate in a single note investment in varying amounts according to each firm's investment objectives and capital capacity. Interest rates charged to developers are payable to the investors and generally range from 200 to 600 basis points over the current 90-day SOFR rate as a baseline and 250 basis points over the current Wall Street Journal prime rate as a ceiling. Depending on investment term, asset class, project size, and scope, LPN investors can expect APYs ranging from approximately 5.75% to 9.75%. BCCG provides a comprehensive investment summary for each project, including detailed information on the developer, their track record and team, the project scope, market feasibility, property valuation, financial projections, proposed note terms, and supporting exhibits. LPNs are offered exclusively to wealth management firms and family offices as private placements under Regulation D, Rule 506 of the Securities Act of 1933, with fully amortized repayment terms of 10 to 25 years, providing 120 to 300 uninterrupted monthly payments. Due to this construction to permanent structure, most projects include an interest-only period of up to 3 to 5 years during construction and stabilization of the property, depending on the scope and scale of the project, during which investors receive a higher rate of return, typically 200 to 350 basis points above the permanent term. Once stabilized, the loan reverts to a long-term fully amortized note, resulting in a maximum investment term of up to 28 years. Investors will appreciate how BCCG prudently protects their capital through the use of 4 independent fiduciary relationships. 1. BCCG uses a local escrow and title company to serve as the escrow agent and trustee of all note investment funds deposited and held in escrow for the funding and closing of each loan. BCCG has no access to or control over investor funds deposited and held in escrow. 2. BCCG uses an independent construction loan administrator to oversee the disbursement of the investor's note investment funds that will be advanced to the project on a monthly schedule provided by the developer to BCCG. 3. BCCG uses an independent construction site inspector to make random site visits between each disbursement to audit the previous disbursement's appropriation for materials, labor, and on-site project management. And 4. BCCG uses an independent licensed, bonded, and insured loan servicing company, which will be charged with the sole responsibility of collecting the monthly rental income from the property management company and promptly remitting it to the note investors by the 5th of every month. This is just a brief overview about BCCG's passive, direct participation, long-term, commercial real estate construction loan note investment opportunities. Additional information is available online at www.bccginvesting.com/investment firms. We've provided links to our website and a downloadable brochure in the description box of this video. On our landing page, you can complete an opt-in registration form to request access to upcoming investment summaries and schedule a meeting with a member of our commercial mortgage banking team. Thank you for your time today. We look forward to working with you.